Just remember that in order for you to get a stock at a good deal, somebody else has to be selling it to you. So you should be grateful that people freak out. All right, I wanted to pop on here and make a quick mindset video about how to react when the market tanks, has a horrible day, and it goes down a whole bunch of percent. Today is, what is it today? Today is September 3rd, I believe. And the market had a bad day today. Okay, it reached an all-time high yesterday, September 2nd. And today it was down like 3 or 4%. I think the S&P was down. Oh, we can look at it. S&P was down 3%. Dow was down just under 3%. And if you search like market on Google or S&P 500 on Google or the Dow on Google, you're going to get all these negative style articles like the stock market is flashing a warning sign. Stock market rout, why it's too early to call a tech plunge, etc. Stock market sell-off. If you search S&P 500, Wall Street has its worst day and month. Stocks plunge. Dow drops 800 points. It sounds like a big number, right? And they're not saying the percentage there because putting 800 points is more scary than the actual percentage, right? Stock market bloodbath. Dow and NASDAQ plummet in the worst day since June. Dow futures. There's a lot of negative energy right now around the market. And what everybody is so, not everybody, but what the news is so freaked out about is this. See, from today morning to like right now, I guess since the market closed, the market went down. It went down. The previous day's close is down 3.5%. And I guess that's a big number. Like I didn't know that this was happening until I logged on to Facebook and I saw somebody post about it there. So that's where I get most of my financial news nowadays, on my Facebook feed. When I started investing, I would check the market like almost every minute, not every minute, but that's kind of much, but every hour I check the market a lot. I remember the first time I bought the index fund that I am now like really into, like most of my money is in this index fund. I would check it like in the morning, in the afternoon, I would have it on my phone, and I would check it in the evening, and I would see how my portfolio did, right? And that's just, I feel like that's the kind of thing that you're going to do when you get into the market, because you're putting your money into something and then you want it to go and do well. You want it to go up. You don't want it to go down. So when it goes up, you're like, yay. And when it goes down, you get all like, oh man, should I sell? Should I sell? It's down a little bit. I want to stop my losses. Maybe I should do a stop loss order or something like that, right? But I want to tell you that one of the most best things I did for my personal sanity, my health, and actually my portfolio performance was to just completely ignore all this stuff that you see in front of you right now. All this negative news, all this like CNBC stuff, New York Times, Bloomberg, Market Watch, right? All these like expert portals where they come and say how the market's going to do, why it's doing what it's doing. They don't know why it's doing what it's doing and what it's going to do based on the experts. Like, oh, okay, we should do this now, and investors are thinking this right now. One of the best things I did was to completely ignore that and just stop watching the news. Stop watching financial news. After you do a lot of research into the thing that you're investing in, whether it be stocks, bonds, individual companies, indexes, countries, whatever have you, after you do your research and you understand what you're getting into and you have a solid foundation, right? Then you shouldn't have to worry about the decision that you've made after you've made the decision. I think it's Warren Buffett who says that when you buy a stock, you should be comfortable with that decision if you go into a coma for 20 years. That's the kind of mentality that you got to have when you're investing in anything, because otherwise you're going to go crazy. you're going to go crazy. I know a lot of people who did like investing, they got into investing, and what they really got into was day trading. They would walk around with their phones. They would have Robinhood or whatever app of the day where they do their trading. They would check it like all the time, every hour, every minute, right? On lunch, they would like, all they would do is look at this thing and they would talk about the market. It's like, oh, it's up, it's up, it's up. Oh, it's down, it's down, it's down. Oh, it's whatever. And I remember like when I ask, let's say that they're up 10% today. Well, okay, that's great, right? It sounds really good. You want to talk about when you're up. You want to celebrate that victory. It's a minor victory. And, people say, yeah, you got to celebrate the small wins. But when I ask, like, okay, well, how long have you been doing this? And they say, a month, a year, or whatever, however long that they've been doing that. And then I ask, well, how have your returns been ever since you started? How have they been? Usually, they're in the red. Usually, they haven't even beaten the market. And I'm sitting there and I'm thinking like, wow, the last time I did anything with my portfolio was, I don't know, God knows when, a long time ago. And actually, I've just been buying ever since on autopilot, right? And my performance has been whatever the market's doing. Oh, the market's up 15% this year. Great. It's fine. I guess I'm up 15%. Or more, right? Because I've been buying in every month, every time my paycheck gets in, whatever. So, yeah, the point of this video is a mindset video. And I know that it's going to happen. You're going to do it. Because if you've never invested before, this is just something that you do. It's something that you go through. You go through it, and then this is how you learn about yourself. And you learn what kind of investor you are. Like, you might enjoy it. You might enjoy the daily, like, look at the market and read the financial news and be able to talk about it with your coworkers and all kinds of people. You might enjoy that for that particular purpose. I personally, I did that. I went through it. I did it. I was that kind of person for a while, but then I realized that I don't like that. I don't like doing that. And that's why I don't do individual stocks as much. I just do index investing because I don't enjoy going and picking stocks individually. I enjoy spending my time doing other things. But most of my portfolio is in stocks, and I do that with index funds. So when the market has a day like today and the thing goes down like 3%, I don't even know about it. I don't know about it. I barely check financial news anymore. It's done. It's done with. The only time I look at it, I guess, is when I see it on Instagram or Facebook or something, and then I'm like, oh, I guess I should check. That's when I look and see what's been going on. But other than that, I don't. And I made a post on LinkedIn. In order to make that post, I went and logged into my personal capital account. And I found that my portfolio is now down a lot. Okay, it's down like 5 figures, which is nothing compared to how it was in the COVID days. That was a bigger drop. And I was always kind of like looking forward to see how I would react when the market takes a big downturn like it did at that time. Because everybody had always said, I'm really tiny here. That's weird. I should make myself a lot bigger. Because everybody had always said that, you millennials, you've never been through a downturn before. So you don't know how you're going to react. You might get scared and pull your money out. The biggest regret that I have for when the COVID crash happened was that I didn't have more cash to deploy and buy when the market was down. Because now it's like, it's back, even with the crash today, it's higher than it was in January or February, all-time highs right before the COVID downturn. And it might crash again. It might, it's November, it's an election. It's almost, well, that's not November, but it's an election year. A lot of crazy stuff is happening. A lot of big news is going on. So it might happen again. Something might happen. You never know. You never know. And that's the thing. That's the deal when you're choosing to invest in stock. It's going to happen. But the key is that you got to just kind of ignore everything. And the more you ignore it, the better your portfolio tends to do. So you see all this news, you see everybody going crazy, and everybody's posting their portfolio returns and their whatever, getting all freaked out. Just remember that in order for you to get a stock, let's say a stock at a good deal, somebody else has to be selling it to you. So you should be grateful that people freak out, right? When the COVID crash happened and the market was down 30%, I know a lot of people were getting out of the market and they were selling. And the people that were buying are the people that are now having the last laugh. So you want to be the people you want to be the person who is having the last laugh there. That's how it works. And now those other people are like, well, I guess that's what had happened, but I was afraid and I was fearful. I think they maybe regret their decision a little bit, but that's it. That's all I wanted to say for this video. I don't know what I'll call this mindset video. Oh, ignore the news, I guess. There we go. All right, bye guys.